Yahoo reports earnings after the closing bell on Tuesday, and while financials may be a focus, investors are hoping for an update on what lies ahead in the longer term. Joining us now to talk all about it, Max Wolff. He's the chief economist over at Manhattan Venture Partners. So, Max, let's start off here with the actual financials. What are you expecting to hear from Yahoo's earnings report this time around? Are there any highlights, things that we should be looking out for?
So great to be here. Thanks for having me. I do think people will look at the numbers. I think you're absolutely right. Monday will steal Tuesday's show when we see who the suitors are and maybe get a preview of what they think this is worth. But that notwithstanding, we are looking for deceleration, both in EPS. EPS coming in about 7 cents a share, which is consensus. We think they'll beat, but only probably at about 8 cents a share. And that's against 15 cents a share last year. So a huge deceleration. We also expect the quarterly total earnings to be around $800 million. Last year it was about $1 billion. Consensus is about 750. So small beats on down guidance for both EPS and also revenue. We are going to take a real close look at how much cash is on book, probably over $5 billion. A big part of the asset story here that people aren't considering, which is there is some real cash in the mix here. The other big story, which we might get a little clarity on, is that Yahoo's been in the market talking about selling part of its patent book, which they've said is worth $3 billion. The market thinks worth more like $1 billion, and possibly spinning out some properties. That is also interesting how the properties are doing, because part of what's going on with the acquisition story here at Yahoo is a lot of folks thinking that the sum is smaller than the parts. Any indication there will be a big, big story.
All right, so there's the number side of things here. Let's talk a little bit more about some of the other parts of the story. There's been some speculation about a management shakeup there. What kind of leadership changes do you think Yahoo needs to appeal to its shareholders, given its current situation of possibly being acquired?
Yeah, so look, Marissa's had her big fans and increasingly her very, very loud detractors. Starboard and some of the activists clearly want to wipe the whole slate clean. I do think we need to see a shakeup here, so we're going to need to see at least a substantive piece of the board turnover in any scenario. Folks do doubt sometimes that Yahoo's for sale, only because they kind of said to the world they were for sale in 2008. Then they definitely said it in 2011. Then they kind of talked about it in 2012. And now we're in 2016 and they're really talking about it. So it has been sort of shadow boxed around quite a bit. We do expect it to be for sale now, and we do expect virtually or the entire board to turn over under huge activist pressure and with a lot of disappointment about share performance, especially as its sort of ways of breaking up its positions in Alibaba and Yahoo Japan haven't worked out as planned or as promised.
All right, so Max, I want to bring you back to something you mentioned earlier here. You mentioned that Yahoo is accepting bids for basically itself from potential buyers up until Monday. What would you say is the most attractive thing about Yahoo right now for companies that might look to acquire the company?
Yeah, so Yahoo's super attractive on a whole lot of levels. We have a tendency to think it's either new or it's worthless here in the US, particularly in tech. But Yahoo still has enormous global traction and a very valuable brands. Sometimes even brands people don't think of or associate with Yahoo. Things like Tumblr, which is part of Yahoo. Things like Brightcove, lots of different products that people don't necessarily think of but are part of it, Flurry, etc., right? So that's part of the story. Then the other part of the story is for Verizon, who's sort of everybody's lead pole position likely bidder and buyer here. Basically, they have 114 million smartphones out there. They can preload all the Yahoo stuff onto them. They can do likewise with their Fios television system. And all of a sudden, Yahoo's great monthly numbers, 1 billion monthly users, can be sort of solved out for their problem, which is only 100 to 200 million of those people check in every day. So I think for a media company, for anyone trying to break into the US, or for anyone trying to monetize their hardware or their streaming service, Yahoo makes a whole lot of sense, and we're going to see bids come in from those parts of the system.
All right, so just a couple seconds left here. Let's put it in 1 or 2 sentences for you here. Who do you think is the most likely bidder and buyer and ultimately successful acquirer of Yahoo in that kind of hypothetical scenario?
So I hate to bore people, but I still think Verizon's probably the most likely outcome here. I think we could see a sort of dark horse come into the bid, but sort of unlikely. I wouldn't count Daily Mail out, and I wouldn't count a consortium of private equity firms out either. There's a lot more value here than people are recognizing. The company is not worthless without Yahoo Japan and Alibaba, but it often trades it like it is.
All right, so Yahoo's earnings report on Tuesday is going to be important, but perhaps more important in this scenario, just an update on what's going to happen with that whole bidding process come Monday. Max, thank you so much for joining us. That's Max Wolff. He's the chief economist over at Manhattan Venture Partners. And thanks for watching. I'm Dominic. Have a great day.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.